Well, if you're joining us from the United States, last Thursday, you probably saw and heard some fireworks for the 4th of July. This Thursday, we might get a different type of fireworks as we are set to receive CPI data, which will move the market as the inflation report will be crucial to determine if we are going to, in fact, getting the two rate cuts that traders are currently pricing into the market. But before that, might be kind of a quiet week, but we still got some headlines to talk this morning. We've got Boeing pleading guilty. We've got some acquisitions in the biotech space. We've got upgrades and downgrades. So let's go ahead and get pre-market prep started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, before we bring my man Dennis on, let's go ahead and run through the indices real quick here. You've got the S&P 500 trading up slightly, 18 cents. That's why the title today is Calm Before the Storm, because right now, we're pretty flat across the board. Q's up about 4/100% there. So quiet there as well. The Dow, everything is just, slightly in the green here. And we are trading around all-time highs. We'll talk about last Friday's price action as well. Bitcoin got a nice little bounce over the weekend, still trading below that $60,000 level here. But as you can see, up about 2% in the last 24 hours. Let's bring my man Dennis on. Dennis, how was your weekend? How you doing?
I'm here. What's going on? How's your weekend?
It was good, man. I was back home in St. Louis again. Got to spend some time with family for the holiday, and now I'm back in Detroit. Got my flight got in late last night. Every time I book a flight to come back home on like a Sunday evening, I'm like, oh, I'll get home at 10:30. Not bad. And then the flight gets delayed. Then by the time you get home and get off the flight and Uber home, I didn't get home till like after midnight. So not enough sleep last night, but that does not matter. The show goes on, and we are here.
This is always the case. I never get enough sleep. I never feel like getting enough sleep. Perpetually tired, but we try to wake up. We get the blood rolling. We get the show going. We wake everyone up here too. So let's do it. Let's go. Let's get right into it. Really, AB, it was an interesting Friday, like just recapping Friday's action. And some of the tech laggards really started to perk up on Friday. AMD, huge day, follow through here again. I'm not sure if Tesla is really the kickstart for this, because we know Tesla started about 2 weeks ago, but now they're starting to comb through and they're like, well, what tech stocks have been consolidating and haven't gone yet? And AMD obviously is a candidate there. I still have the half size position AMD. I was liking it. I didn't rebuy. I should have rebought some more of the extra stock that I had bought, but I still have the core position. Another stock that's been perking up and having a pretty good morning here is Palantir. So another AI play that's perking up. PLTR has been in consolidation station for the better part of 3 months, and now it looks like it's trying to break out. And one thing I've realized is the breakouts in the technology stocks, when they break out, they have been working. So I'm taking note of both of those this morning. The third one, which is not breaking out but been consolidating here for the better part of a month, is CrowdStrike. CRWD right up at the highs. So, it's kind of a technical Monday here. We don't have a lot of news, but I thought I'd go through a few charts that I was looking at on the weekend. Just setups here. I don't have a position in CrowdStrike yet, but I'm thinking about if it breaks out, if it actually breaks out, gets above that 395 and starts looking at 400, it could get interesting. So I think, buying stocks at all-time highs as trades has been working this year. And I think we continue to see the momentum and the strong get stronger with the weak still continue to get weaker.
Yeah, and it's interesting here, talking about Palantir. A lot of people were, talked about back when interest rates were, if you can remember, Dennis, as far as 2.5, 3 years ago when interest rates were near zero. The last time we saw Palantir up at these levels above $25 a share, it's, oh my God, all this speculation is a zero interest rate phenomenon, all this stuff. Well, now interest rates are above 5%, and you're still seeing a decent amount of speculation on some stocks here like Palantir. You look at the actual valuation, 82 forward PE, a 27 price to sales. but people are willing to bet on these names and buy stocks with that high of a valuation if there is an AI story here.
Yeah.
And you kind of have the divergence in the AI names of companies that are, you know, getting to, getting their earnings growing from that AI stuff already right now versus down the road. And I mean, from what we can see, Palantir still looks like one that's a little bit down the road. But certainly the AI story is there, and actually a company that has been involved in AI for a lot longer than most companies on the market. So, I mean, I'm actually not in Palantir. I know it's like a retail favorite, fun stock to trade, always volatile, but again, seeing this stock get bought up here at a pretty high valuation.
I had it written down on my sheet. Just waiting for the breakout. We kind of got it Friday, and it obviously has continued here as well this morning here. So again, it's hard to fade these breakouts. It's coming right back down because when you're in consolidation for that long and then you break out, the breakouts in tech have been working. So I'd be cautious shorting into this, and I wouldn't be surprised if we saw this over $30 sooner than later. We do have some news here this morning too, though. If we're speaking about AI stocks, and I
Yeah.
guess it's, maybe one that's not on a lot of people's radar, but it might be after this morning. Give us that news on Corning.
Yeah, so Corning raised guidance here. So here, let's go ahead and pull up and get the specific numbers here. In our trusty Benzinga Pro, Corning expects sales of 3.6 billion. It was 3.4 billion prior. The estimates were 3.41. So they basically were talking about AI helping boost their core sales. And I mean, anytime you got a company that's coming out and saying, "Hey, we're actually going to make a lot more money than the market was expecting," I mean, you're talking about a boost here of $200 million. You have the stock trading up now over 7% this morning. Let's go ahead and pull up the chart on a daily here. We can see. Oh, give me 1 second. Yep, we can see it here. So we don't have the candle here yet until the market opens, but we should be trading right around here. You would have to go back, Dennis, all the way until March 2022 to find the last time that Corning was trading above this $40 a share mark. We're set to open the market here at around $41 this morning on Corning. That is ticker GLW.
Yeah, it's a big move. CEO was just on CNBC as well, interviewing here, so that probably helped to give it more of a lift. News came out just after 7 o'clock. Stock was trading flat, and then I saw it go off in the filters. And yeah, so it's a slight raise, but I mean, whenever you mention a raise and then you say due to generative AI or something like that, the bots go nuts. And it's a big move. It's a big 7% move. Not sure I'm chasing it, but at the same time, it hasn't been this hasn't been the play to fade anything with AI news. So I think on pullbacks, I'd be interested in possibly buying a dip on this thing. But GLW, nice move up here this morning, up 7%.
Yeah, and this is always interesting to me. I mean, I'm not gonna, let's try to do some quick math here. I mean, a $32 billion market cap, up 7%. So that's at least let's call it $1.5–2 billion in market value added because they raised guidance by 200 million. So there's a little bit of a disconnect there.
That's Wall Street math right there.
I know. I mean, but because
it works.
But then it's like, oh, well, if they're raising guidance this quarter, then that probably means they're going to raise guidance next quarter too, and you have that growth. And so you see, and it doesn't, it's not like the perfectly efficient market where the company says, oh, we're going to make 200 million more dollars. The valuation goes up $200 million. And we've seen that actually with Palantir before, where a few months ago, I forget what the exact date or deal was, but Palantir announced like a new $150 million deal, and then the stock went up like $1.5 billion. So
yeah,
always interesting to see that. But I think, it makes sense because, again, like once you get the positive momentum going, I think a lot of investors are willing to bet that those trends continue, and it's not just like a one-time off thing. If Palantir gets this deal, that means there's probably, they're going to get other deals, etc. So,
and it's not like it's investors driving price. I mean, institutions do drive price in the long run, but 7:30 or 8 o'clock in the morning here, there's no institutional money managers hardly even at their desk. What is driving it this morning is the bots. They come in, they see, you almost see the move like it's instantaneous. You see boom, raising guidance, going to be higher than the lower than the high end, and they just grab it and they don't even think about anything. And that's what you really see is, just that instantaneous move. If you look at an intraday chart from Benzinga, you probably see the pop, which is pretty much instantaneous. So, then people come in, the CEO is interviewed, and then you get some, real money in there. But the first move is all bots. That's on every headline.
So before we get to some of the other market headlines, going back to my point about, I guess, that there's still apparently, or it looks like still a decent amount of speculation out there, regardless of where interest rates are. We don't talk about Bitcoin too much on this show, but you had a lot of people that are heavy and deep into Bitcoin worried after the king of crypto dropped below that $60,000 level, but got a little bounce this weekend. So I'm just going to pull up the daily chart here, Dennis, so we can kind of do some technicals. Although we don't have Joel today, but we can still do technicals without Joel here.
I feel like I feel like we've I feel like Friday might have been the capitulatory bottom. So, I think we will bounce here eventually. Obviously we don't know anything and, it's out of favor and we've started a downtrend. We broke the uptrend. I haven't added my Bitcoin position. I have the core position, but I think eventually we see Bitcoin back up to the high. So I think if we got a long time horizon, you're hodling here. I think if you're buying into this dip, you'll be happy, a year from now that you did. I don't know if this is the end, but it felt like it's oversold. We went down substantially here, pretty much in a straight line for a month here now. It feels oversold. It feels like this time for a technical bounce. But again, this isn't the market that contrarian trading has been working. So remember that as well. What has worked is consolidation near highs and then breakout trading. That is what is working now. 6 months ago, we were in a different market. And sometimes, basically at every strategy has two core, contrarian and momentum. There's basically two types of core strategies. You're a momentum trader or you're a contrarian trader. And it all depends on the market that we're in. I'd say 80% of the time it's been Momo markets, but we've seen periods where contrarians have been working too, where you've been, dipping and range trading and just buying, the lower end and selling the higher end. We've seen periods and we've seen stocks where that's working too. But really, what has been working in 2024 is technology and breakouts on technology. And I think that's what, if you're coming here and buying Bitcoin, you're kind of going against the overall trend. It's maybe not the long-term trend, but the short-term trend is definitely down. So just consider that. I've given you a few setups this morning. The CrowdStrike setup looks a hell of a lot better than the Bitcoin setup.
Yeah, I don't know why we're having trouble loading this Bitcoin chart, but the chart to me, I'm no technical expert, doesn't look great. We can go back to CrowdStrike here, which now the Bitcoin chart wants to load once I'm on CrowdStrike. A little trouble here, but this is the Bitcoin chart, so you're kind of seeing it. If we break down, this is going to be the key level down here, a few $1,000s lower than where we're at right now, around 53,000. So you have some resistance there. If we get down there, that could be a spot where you're looking at potentially buying if we do get a bounce there. Now let's go ahead and pull up CrowdStrike here.
You can just see the difference, like what is working. So think about the mindset. When you look at a chart, it's about, the psychology behind the chart as well. It's not just about the patterns. What you have here is everybody who is long this stock is whole. There's not overhead supply saying, please give my money back. And then you start to break out to new highs and the short's like, it's overvalued. You're trying to get. So, it's always, not. And again, it's the type of market that we're in. But in this 2024, breakouts have just been working so well. Like think about Apple through 200. It was resistance. It broke out through 200 and you took zero heat. If you bought Apple through 200 when it was breaking out, you took zero heat. It's now 227 this morning. So zero heat. We know NVIDIA had breakout after breakout after breakout after breakout, and continued to go here. AMD recently is just breaking out through 170. We know Tesla, same story, broke out through 200 one day, and it's 251 5 days later. So I think we just have to, be aware that, you're trying to be a hero in China. You're trying to be a hero buying the dip. You're trying to be a hero calling a Bitcoin bottom. What has really worked well is just classic breakout trading in tech. So I think and chat, give us some other names that you're looking at, stocks that are potentially breaking out. I've given you 3. I'll even throw in a 4th one for you. What is starting to look interesting to me is Shopify. Now, again, this isn't as nice because it's not at the highs. Like CrowdStrike looks clean because it's at the highs. But Shopify has been consolidating here for the better part of a month too, and is now starting to perk up, that little hook that I talk about. Start getting over 68, 69, 70, you're getting into a gap area because we had the gap down from the last earnings report. So if you look at SHOP, 75, gap down to below 65. Well, it's been trying to crawl its way back, and now you're starting to actually get into that gap there again. So 68, 69, 70. Then you start thinking, well, there's not much in here. So, you could see a 68 to 75 move, not, short order, but there's the potential for it to be there. So just keep in mind, it's all about momentum, this market. And once they start getting the momentum, then they can go. But in the case of Bitcoin, there's just not any momentum there right now. So it's hard to just say, okay, this is the bottom. I'm going to go with this one.
Yeah, and that's something, here on the Shopify chart, to your point, Dennis, you can see, and this is going back a couple of years now, but you can see all this consolidation down here. And then once we started breaking out, it's really, you've had some big dips in there on Shopify, but the trend has still been on the upside. And then, back to the talking about other stocks that have broken out and buying those breakouts. You look at something like a Google, which, obviously broke out, made new all-time highs, and has now just been kind of slowly creeping higher and making new all-time highs. Amazon, you finally got that breakout that a lot of people were looking for last week as well. So, the big tech stocks,
Meta too.
Mag 7, is looking like, magnificent again, because all of these stocks, Amazon, Google, Meta, Apple, all trading, NVIDIA, all trading at or right around all-time highs here. And this is coming, as we're expecting interest rate cuts here now in September is the consensus right now among most traders. That's what the bond markets are pricing in, according to the CME watch tool. To me, like, one thing I guess I'd be kind of worried about is now that everyone is looking ahead to these rate cuts, like, say we actually get them, could it be almost like a sell the news event that once we get the rate cuts, it's like, okay, well, this is what everyone was talking about for 3 months now. We finally got them. And that doesn't necessarily mean these stocks are just going to break out to new all-time highs.
Yeah. And again, these stocks that we're talking about right now aren't interest rate sensitive. These aren't the ones that have been held down because interest rates have been too high. Interest rate cuts don't hurt these stocks, but you could see that rotation into those laggards. And this is what, people keep saying, when the small caps, when are you're going to get this catch-up trade in all of these stocks that have been lagging all year? And we know there's a substantial amount of them that have been lagging all year. But when are you going to get all these catch-up trades? We're going to get these catch-up trades when interest rates actually start going lower. Until then, and we're not anywhere as close. September is probably the earliest that we're going to see any cuts, and I don't think we're going to see them in September. Where's your Fed watch tool? Let's bring that up and just take a look. We're taking an interest rate conversation for about 5 minutes here, but where is the watch tool here where we know they're looking for, when the first interest rate cut is, like, potentially?
So we go out to, here's the next meeting on July 31st. We only have a 6.7% chance of a rate cut. So 93,
that should be zero. They're not cutting in July. That's just silly.
Well, it is moving lower. So it went from, 8.1, 9.3%, 7.2 to 6.7. So it's trending toward that direction that we're not expecting one there. Go out to September here. September, we're looking at a 67% chance that it's a 25 basis point cut, a 5% chance that we're actually going to be 50 basis points lower. So you add that up, that's about 71%, 72%.
I don't know who puts these numbers together on this Fed watch tool, but okay, go ahead. Do you know?
Well, I was just going to say the methodology, what they're doing is they're pricing in the futures of different bond markets and treasury markets and stuff like that to help determine, I guess, the probability. They're not like going out and asking, do you think they're going to cut rates? And it's not, there's some misconception there because it kind of looks like it's like, 67% of traders think that it's going to be here, which isn't really exactly how they come up with these numbers. They're again, using the futures of bond markets and stuff like that.
Yeah. Whatever methodology they use, they're doing an absolutely terrible job at it, because they were like 98% in April, and then we get closer and then they kick the can down the road, Now we're still 67% in September. I don't think they're going in September. I think that number should be like 20, 25. We'll see if I'm right or wrong, but I think that they've just done a terrible job trying to predict. Everybody thought 3 cuts, this, and again, now they're saying 2 cuts. So maybe September they are going to go, but we've been fooled, once bitten, twice shy. And we've been fooled by these sites before, obviously predicting, the interest rates, until we start seeing CPI really start to, like, if the number comes in Friday or Thursday or Friday and it comes in really light and okay, inflation is dead, then, you start seeing, but it's just, April. Yeah, I remember, like, when we were in like December, they were talking April, like 98% chance. It didn't happen. The 2%ers won. So I don't know. It just seems high to me. Even at 67, it seems a little bit high. I think by the end of the year, we're going to see an interest rate cut, but I think it could be like even December. So we'll see what the numbers do. But when you hearing Fed speak, it doesn't sound like interest rate cuts are imminent here. And I think the TLT is telling you the same damn thing. We really haven't seen much of a rally. It perked up here the last couple of days with the recent sell-off. Keep an eye on the TLT. I mean, that's what drives the bus for all the other stuff that is not technology. And the IWM just can't get out of its own way. I mean, there's just it doesn't seem like any, life here whatsoever. It's down on a year. The S&P, I believe, is up 17 or 18%. The IWM is flat. I mean, the catch-up trade has been the worst trade of the year. Everybody who's been calling for the catch-up trade has been dead wrong. This has been the market with the Magnificent Sevens. It's too much value. We're paying 30 times for the Magnificent Seven. We better be paying 12 times for small caps. All that happened is gap got wider. So I don't know why, the continued fascination with everything else when the Mag 7 and a lot of them just continue to march higher. Meta new all-time highs as well. It came all the way back. I guess buy the dip on the Magnificent Seven and win money. That's what's been working, and that's what continues to work.
I'll pull up that IWM chart in a second here. Jay Rice's point in the chat. I mean, we do have a few more data points before that September interest rate decision. I was just pulling this up. This is the U.S. unemployment rate, and back, when people, like, to your point, Dennis, when people were talking about, oh, we got to cut rates now, we still had a very, like, historically low unemployment rate now. So if you go back and look, we got to a low of 3.4% last April. Now, throughout the last year, that has started to creep higher, and we're at 4.1%. So I think with seeing the labor market weakening slightly, that lowers the bar for the inflation to the point where, like, as long as the CPI doesn't come in hot, but at the same time you have the unemployment rising, I think that gives the Fed a little bit more leeway there to make an interest rate cut there. I'm not saying for sure that's what we're going to see, but I think it is truly going to be data dependent here on the next few months. And then, but again, I think that kind of lowers the bar for what we're looking for on the inflation as you have the unemployment starting to creep higher. Let's go pull up that IWM, because last Friday,
Sure.
I mean, while the rest of the market was kind of rallying, the IWM did not do anything. And I felt that heat because I was looking on Friday, like, we had a slight dip after the open, and I was like, like, I'm feeling pretty good. We were just closed for the market the day before for the 4th of July. I was like, it's Friday. I think that the market's going to do well today. So I was looking for some things to buy calls in. And here's me just being silly. I bought calls in IWM instead of in the Qs or in the SPY, some 0-date expiration options.
Yeah, it goes down.
And anything else I would have bought, Dennis, I would have made, 300% on the trade. And now, instead
But
I bought
the
bought
the
the
2000 stocks that all just don't go up.
and that I knew don't go up, and that I should know this, that it was silly, but I just was feeling, I don't know. I thought that maybe that was finally the day, and I was trying to be a hero. It didn't work out. IWM, I mean, you can see, let's see, pull up the 5-minute chart here. Today is actually starting to kind of creep up higher a little bit, but this is where my cursor is going back on Friday. And here, let's try to pull it up against, like, the Qs here.
You know what the tell was for me on the IWM when we had, and when was it? Like the data that we had back in early June or mid June. I think it was like June the 6th, maybe, or maybe June 12th, actually. June 12th. And we had the big pop in the IWM because something was light. Something came in light, and they ripped the IWM like $4 that morning. And then in 2 days, it gave it all back. If Joel was here, because he doesn't have the goldfish memory like I do, he'd remember that. I don't know if you remember, AB, but back on June the 12th, we had some economic data that came in, and chat's going to be able to help me. And it was light. And they ripped the small caps. They're like, this is it. This is a small caps moment. And then 2 days later, they give it all back. And I'm like, this just is the worst tape for this stuff. It gets the data that it needed, and they give it all back. So, I mean, it's hard to come in here and be a bull, on anything except technology. Because if I look at the long-term portfolio and I have a diversified long-term portfolio, the only thing that really is working is tech. I have, some IWM. China's been a disaster. I had some Baidu and Baba disasters. They just can't find anything. They seemingly are down every day. Baidu's down here again today. I know they had a day Thursday or something, they popped up a little bit, but just been epic disasters. The catch-up trade in Baba, the catch-up trade in IWM, catch-up trade in China stocks, catch-up trade in Nike and stuff like that. That all has been garbage. None of the catch-up trades have been working. What has been working is actually chasing the leaders or just buying dips on the leaders. And I just don't know. I don't think we changes any. Even if we get light down on Thursday and Friday, I'm not sure it changes because we got some economic data last week and it didn't help. So I just don't know what kickstarts it all. And maybe it's just telling us, maybe these companies that are making up the IWM 2000 companies in there, maybe we just need to stop talking about them. Maybe we just need to not worry about those companies because the only thing really making money this year is tech.
Yeah, and someone in the chat is making a point that even if the Fed cuts the expected 50 basis points, how much does that really matter for these stocks? A lot of them probably need a little bit more than that in terms of rate cuts to really get going. But this is
for sure.
This is
and
looking
again,
at
solar, which has been just the disaster of all disasters. I mean, Solar Edge finally having a morning here where it's actually trading higher. It's up 5%. I don't know if there's a headline or something here, but the stock just goes down every day. I mean, the solar has just been a disaster too. And, I know we sound like a broken clock around here, but, the broken clock, when it's telling the right time, you might as well keep talking about it. And, what has been working, again, we're just going to continue to say, is breakouts in tech and tech, just tech. That's what's been working. I don't know what changes that story. I'm really trying because even if the inflation data light, I'm not sure it changes. There's just so much overhead supply and so many people banking on the catch-up trade. I think, if you're underweight tech, you've been underperforming all year. And I think you've got to look at, stocks that we just gave you on the show when we started the show. AMD has been a tech laggard. Buying tech laggards is a better play than buying laggards in other sectors. So I like AMD as a tech laggard. Shopify has been a tech laggard. Hell, even Kathy has been a tech laggard and starting to perk up here, but she's got so much other junk in there. I'm just scared. Palantir has been a tech laggard to a certain extent for a few months here. Hasn't really went up in the last few months, but starting to break out. So there's 3 of them. And then CrowdStrike's been a tech leader, but it's consolidating at the highs. So I love that chart right now in CRWD. I think CRWD is going to see 400 sooner than later.
Yeah, going back to Solar Edge real quick, it did catch an upgrade from B of A Securities, upgraded the stock from underperform to neutral. So you're seeing that again trading up about 5% this morning.
Relief pop.
I mean, just not great looking charts here in the solar space. You pull up the TAN ETF, you can see that while you have the overall tech market and many names making new all-time highs, this ETF that tracks the biggest names in the solar space is down still from highs of around $127, trading down at $40. Now you are seeing some consolidation down here. But again, like if I was going to try to be a hero and come in and buy something like Solar Edge, I'd want to see it start consolidating a little bit more rather than hopping in while it's still in this solidified downtrend, which you're seeing right now. We can look at other names in the space, First Solar, a little bit of a better chart here, but still getting crushed. Enphase Energy, see how that one's doing. I think they're all trading up a little bit this morning on that upgrade to Solar Edge, but for the most part, these things, none of them are even trading near their all-time highs, while the market is at all-time highs and seemingly makes new all-time highs every day.
And there is other Intel. The chat's preaching Intel at me right now too. Yes, I am still long Intel. The problem is, there is a overhead supply here. You get to 35, but Intel's perking up here too. Had the long period of consolidation, 3 months bouncing off the 30, couldn't get to it. Now it's trying to actually get out of this range. So I think there is room on Intel to 35 here. But again, overhead supply. CrowdStrike's probably an easier trade here than Intel because not billion bag holders in CrowdStrike. But I mean, there is other tech stocks perking up here now too. Call it, combing the ditches, trying to find what hasn't gone, whatever you want to call it. But, there's a theme here, and the theme is the tech has just continued to work.
Yeah, and I think a lot of people now are looking for these names in the AI space, like you mentioned, Dennis, that haven't really had that run, like NVIDIA or
Yeah.
SMCI. And I mean, you look at like a Dell, which isn't talked about as the NVIDIAs or the AMDs of the world, but certainly has had this benefit from the boom in AI demand. And Dell has these AI servers, and their revenue from the servers is starting to peak higher. And Intel, we know, is building these new factories for chip hubs in the United States. So Intel, when it's all said and done, like, is set up to be a winner from the AI trade. It just hasn't really acted like one yet. Well, it did until it had that like one bad earnings report, which dropped the stock a bunch. And then you saw it consolidate down here around $30, now starting to perk up a little bit, up about 3% this morning. I'd be willing to take a stab on Intel down here for the long term. I don't know about for like a swing trade or a day trade or anything like that. But again, like it's set up to, over the next 5 years to a decade, benefit from this boom in AI demand. The question is, does the company execute? I'd be willing again to take a bet on it here. But that's more for a long-term position rather than just a trade.
Yeah, and I've put on a long-term position Intel too, but I did it wrong by trying to catch the falling knife, and even in your long-term portfolio, it's still not the play to catch that falling knife. It's better to wait for a period of consolidation, wait for the stock to stop going down and then turn. Because I clearly went from 45 to 36, and I just thought it's got due for a bounce. And it continued all the way to 30 without any bounce at all. So if you wait until you actually get the stock to stop going down, that's the better play. So, I'm always learning as well. And we don't do things perfectly. Sometimes we try to be a hero. Tesla, I waited a long time on Tesla too. I was sitting here saying, yeah, I love it at 180, I love it at 180, and went to 170, 160, 150, and I bought some more. And that was just a long-term play where I really believed in the story. And I believed the story was going to turn around. I'm being rewarded for that now. But I mean, sometimes you got to wait a long time for these stories to actually turn around. If you got a long-term time horizon, though, and you're not on margin, you're not buying with options, you don't have to time it. You can just sit back and wait. But, buying good companies that you think are going to turn around isn't bad. But I think if you're trading them, I think if you're a trader, wait till they stop going down, wait till they consolidate, wait till they actually start going up again. And maybe that's the time you strike.
All right. Other headlines in the market. We haven't talked Paramount this morning. Paramount is trading higher just as this deal with SkyDance Media looks to is progressing. It looks like it is going through now at this point, getting some follow through here. Closed up 3% last Friday, up another 3% this morning. You had, what was it on Friday? We got another headline. Kerry Redstone agreed to sell stake in it. I mean, so I don't know. I mean, it seems like the market that investors right now are willing to bet that this deal is going through.
It looks like it's going to go through.
Yeah, I don't know. I mean, if there's going to be any antitrust issues or anything like that here. But
Paramount's got so many problems here. They're going to be trying just to get this deal done. Media, there's dime a dozen these companies here. They're all in trouble. I think if they're coming in antitrusting this, they're going to have problems, and we're going to do another JetBlue Save type deal where you come in antitrust or iRobot, Amazon. Like, they need to back off and start to get a little bit, less with the antitrust here, because some of these companies are merging for survival. Like, you got to look and say, well, this isn't merging to try to kill the competition. This is merging for survival. And those ones you got to let go. Like iRobot was, trying to merge basically, when it's, now it's at $8. I mean, it's almost out of survival. JetBlue Save was out of survival as well. I think Paramount's in trouble by itself here too. It needs help, needs a cash infusion. It needs something, man, just to turn it around. I think the merger's going to go through. I think the story here is over.
All right. Well, if you want to try to trade some of that ARB this morning, just know that on Paramount, looks like that deal is officially going through. But all right, it is 8:35. We've got our esteemed guest for the day hanging out backstage. That is Anne-Marie Baiynd. So without further ado, let's bring Anne-Marie on to see what she's been trading. All right, Anne-Marie, welcome back to Benzinga's PreMarket Prep. How are you doing this morning?
I'm doing great. Loving listening to Dennis talk about the dog that the IWM is. I've got some pretty solid ideas on what I think's happening inside of there, but happy to talk stocks. Always love it.
Yeah, I want to hear your thoughts on the IWM. Let's continue this train of thought here. And what is happening inside those 2,000 companies that, seemingly can't find their way in any type of market, because S&Ps have been just kicking butt, Qs kicking butt, and then you got the IWM that's just getting kicked in the butt. What turns the story around, Anne-Marie?
So, we talk a lot about the economy and the market being bifurcated, right? There are obviously some places that are really not doing well. We can see weakness in the economy in all kinds of spaces. And if I were a betting man, I would say that what's happening in the Russell is not so much interest rate sensitive as economy sensitive. And so what I see is big players using any spikes in the IWM for exit liquidity. And so for those of us that maybe aren't super familiar with exit liquidity, it's where the big bounces make those folks with the highest holdings in a particular instrument leave the market versus enter. And so the reason that I suspect we've got this stall out here is because if we went in there and we looked at all of these companies that struggle with cash flow, I don't think it's all interest rate information. And that's why when we see these notices about interest rates, we just say, hey, we should be moving up, but we're not. So there's something else that's correlating with this move versus just interest rate. It becomes a much more complicated play.
I've argued for a while too that maybe, there's a lot of these companies that may benefit from AI, but there's no direct benefit for a lot of these companies. There's no direct revenue streams coming, and if you think it's AI versus the world here right now, the IWM is kind of in the wrong spot here, because most of those companies probably aren't creating the technology. They're probably users of the technology.
Exactly. And they're using it and then cutting staff because of it, because they're still trying to make their margins.
And again, I don't know, if they can, reinvent the wheel here. Like maybe it's going to be, those margins are going to be, wide enough that they're going to turn it around, but at the end of the day, there's still a trade-off here too, because as you cut staff and you lay more people off because AI is replacing those jobs. I mean, there's less consumers or less dollars out there to consume too. That's why I've always been a little bit, it's hard to just say, yeah, AI is going to make everything better. It's going to make things better for some companies, but it's not going to make things better for all companies.
Oh, 100%. And we saw that in the age of the internet, right? The 2001, a lot of occupations absolutely disappeared. And we've got a new, I guess we've got a new work paradigm. I'm not really comfortable doing any investment inside of the IWM unless something is really, really strong. And so buying that as a whole, that is just not the pond you want to fish in, unless you're doing the same thing. You bought it and you're like, holy cow, this isn't moving. Next big spike up, I'm out of here. Or you're saying to yourself, oh, next big spike into major resistance, I'm going to take a short.
What ponds are you fishing in? Let's talk about, what you like right now and what you see, where you see the fish, where you're going to catch some fish here, Anne-Marie.
So, it's boring, but it's in the tech, right? So if we're looking at the ETF that has tech, or particularly software as a service, we hear the noise of, hey, everything's being driven by these 5 stocks, and that is not untrue. But we're seeing some sector rotation. We're seeing software as a service really coming online, and cybersecurity obviously coming online. What we have to look at is being selective and realizing that we're sitting in a market where it doesn't pay, unless you're a long-term investor, right, to get involved in things that are lagging. And so a lot of times I go stick with the winners. And I remember one time I was on the show and I was reading the chat, which I try not to do because I can't do I can't chew gum and walk at the same time. I would trip.
No.
And so as I looked at the chat, someone said, I just cannot listen to anyone who says, hey, just stick with the high flyers. But I got to say, if you're not in the market of these high flyers, then you simply need to wait until something comes back, until you have a shake, which I think this week we're going to have a little shakeout, right? We had Monday, that was a little bit of sideways action. It was a little bit of a doji. We had Tuesday, Wednesday, and Friday give us these great bullish candlesticks. Some of them, in the futures market, I think we had a Maribozu candlestick in the NQs. And so that's really excited buying into what? A week where we now just have to wait, see how earnings play out, see what Jerome Powell says tomorrow. So I think we have this digestion move waiting. I don't know if it's going to be indigestion or not, but it's going to be a move that's going to say, hey, listen, let's just work off a little bit of this oversold action and see the next place we're going to bounce. We're clearly in a breakout formation in the SPY, the Qs, all of those big guys. They're in a breakout, but we simply cannot chase these tops. We've got to assess risk, and we've got to assess time in the trade. That's super important. Someone like you, Dennis, really amplifies the need for that, because you'll go in, you'll watch for the move. If it comes, great, you take it and you leave, and then you do it all over again. And if you're not comfortable with these shorter cycles, you need to either step back or practice on the side and learn to get better if you want to play these shorter cycles, because we are seeing some pretty big dips. I mean, let's take a look at Palo Alto Networks, right?
Sure.
Doing super well, came in, had a massive drop. Everybody was like, what just happened? And it based there for a while. And now look at it, all the way back up at the top. In these sorts of winners, right? If you go to the sector that this is sitting in and go, tell me the ones that have been up the most in the last 2 months or 1 month, and then they savagely take a dip, you got to be comfortable buying a little bit of that dip in the powerhouses. Don't go fishing where all the fish look sick. Right? I mean, you don't want to do it. Go where the fish look healthy. And when the market takes a dip, realize that this is a space where everybody's going to go, I got to get in. And for many of us, our brain goes, okay, I got to go find something cheap because everything's expensive.
Yeah.
But that is just not the environment we're sitting in today.
This is the issue, and this is human psychology. It's to come in and buy what is cheap and play the catch-up trade. And it's like, well, I can't buy NVIDIA here now because NVIDIA, is up 100% the last 3 months. And how do I chase it at this point in time? When, actually, if you look at the chart of NVIDIA, and I just bring this one up, it's actually starting to consolidate here again. I mean, you've seen a huge move from 80 to 140, and maybe it's over. If NVIDIA starts sneaking its head back above 130, you start thinking about the highs again. It starts to look healthy all of a sudden again. So, as opposed to, obviously this has been, I've been picking on the China trade, and I have a couple of these stocks in my long-term portfolio because I have a long time to wait. But you know what? That waiting is hurting more and more every day because, one, there's an opportunity cost there, and two, these stocks just continue to actually kill real capital here. So, I mean, it's easier actually, to maybe chase the leaders, and it seems like the better trade has been to chase the leaders as opposed to trying to call a bottom in the laggards.
Absolutely, because underneath there are some systemic issues. And you know what I think about China and the China stocks. I always short the brand new highs simply because I just systemically, there are some relationships that are broken and breaking. So it keeps me on the cautious side there. And really, I mean, we're taught to be, hey, listen, go look for value, but we know value is not working right now. So we look for the guys, when NVIDIA dips, we go, well, who else is running? Amazon and Meta and Tesla. But, Tesla is an incredibly shorted stock. And I think this move up in Tesla is a gigantic short squeeze. So am I in the space where, everybody's like, yeah, you're just whatever. But I'm looking at the whole chart going, wait, what am I seeing? I'm seeing lower highs. Yes, I'm seeing higher lows. But when it starts coming into those lower highs, I'm clipping the wings and I'm getting out of there. My time horizon for trades have compressed and compressed and compressed over the last 6-8 months. I just am not being rewarded for holding on in my longer term accounts.
Well, and that has been the case here. Really, if we take it out just the last 2 to 3 years and give a perspective, the trading has worked better than the long-term investing. And yes, the S&P is at new highs, but really when you give perspective, 2021, we were 479. 3 years later, we're 555. So yeah, it's been pretty good if you held on, but there's been some significant dips. And I would argue that the trader has probably made more money in that time period than the buy and holder, simply because we were down for 2.5 years and we finally have started to come back here. So are we now in this clear blue skies and just going to continue up? Maybe. Or maybe we're still in a market environment where there's going to be hiccups, and maybe the trader actually that's booking the gains and then reloading, on the dips makes more money than the buy and hold guy.
For sure. Unless, you're trading the specific index or ETF itself, like the SPY or the Qs, where you're consistently buying that dip, everything else, or just buying the SPY and hanging on. And we know everybody comes in, they get their 401k, they go, hey, I'm going to allocate it into the SPY because, the broad market is beating most every hedge fund and every benchmark. It's almost impossible to catch up if you are a portfolio manager and you're looking for diversity. You're not going to find any. It's just in this heavy concentrated space. And we know we're going to get some sort of jolt, but with the VIX so low, we know that every jolt is likely to still get bought because nobody's buying protection. Nobody's buying protection.
Yeah, and we can continue to buy protection. And the one thing is that protection is cheap. We were pricing it out. I think I was with Christian, a little while ago, and we were pricing out, or Christian Frommer was just talking with him on Twitter, and we were pricing out protection. And it is fairly cheap right now. I think if you're looking out, 3-month protection, it's 2%. It's very low. When the VIX gets this low, protection is always cheap. One issue you have, though, is if you are constantly protecting your portfolio, you will, in the long run, erode almost all of your returns because
absolutely.
So you got to time your protection right as well. And when you're sitting here in the summer months, we call it the doldrums. I'm like, usually this isn't the time where we're going to have a violent move. Now, not saying it can't happen. Headlines happen. Geopolitical risk is real. Something could happen, but typically July and August are not the most ideal times to be hedging your portfolio because they're quieter periods for the market. When you get September, October, everybody's getting back. That's where you can get more violent moves here. But I'm not hedging my portfolio at this time there. I rarely hedge my long-term portfolio, but in some cases, if you see risk, right now, protection is cheap.
Yeah, for sure.
Anne-Marie, so before we let you go, just talking about this week, we're kind of looking set to open right around all-time highs. How's your sentiment for the week? You think we're going to break out, make new all-time highs, see some consolidation here on the overall market?
I'm looking for highs that don't hold.
Okay.
So my thought is what we should have this week as we get into this wait state is folks try to break the top edge. It puts the sellers in a space where they go, holy cow, I got to cover, drives it up just a little higher, and then there's simply no bid at the top. And then, everything's going to be in that space that tells us, all right, we just need to consolidate just a little bit. So that is my thought about what's going on. everybody's thinking, hey, this 25 basis point cut is very likely going to come, but it could be one and done. And 25 basis points is a lot. It's probably going to force the bond market into this, ooh, here comes another 25 basis points, and then maybe everything will start to cascade. But like you were saying early in the show, Dennis, everybody has been predicting, and I'm not going to say everybody, because my thought was we're not getting any rate cuts this year. And as we come into this September space, he might just be sort of a Jerome, and the team might be just sort of treading a little bit of water. And so trying to appease some folks that go, please, we need a rate cut, and giving them one that's going to be pretty much a shoulder shrug. That's going to be a great place to watch the IWM explode and then set up a brand new short. So that is how I'm staring things down for the moment.
All right, well, there you go, Anne-Marie Baiynd. And of course, if you want more from Anne-Marie, you can always sign up for Benzinga Pro, get in her very exclusive and profitable chat there in Benzinga Pro. We love bringing you on, Anne-Marie, and I hope you have a great rest of your Monday.
Love both you guys. Always love getting to spend time with you. Have a great rest of the week.
Thanks, Anne-Marie.
You do the same. All right, guys, that was Anne-Marie Baiynd. Again, Ryan Faluna in the chat. He'll be able to post a link if you guys want some more from Anne-Marie, because she's always got some great trades. She does these very exciting butterflies and stuff like that. That I'll be honest, I might be a little bit over my head, but one day I aspire to be half the trader that she is.
She's been a great trader for a very long time. One of the original guests on our show. She's come on our show for, I think we're entering our 11th year of doing pre-market prep with Benzinga, and she's been with us since the beginning. So just a fantastic trader and a fantastic guest.
All right, Dennis, we've got a few more minutes left. Let's see some other headlines. We haven't talked any ServiceNow yet today. ServiceNow trading lower after a downgrade from Guggenheim. So this is I'll give Guggenheim some credit here. The stock is trading right around all-time highs, and you typically see these downgrades start to come in when the stock is already establishing a downtrend. But Guggenheim making a call here, putting a line in the sand saying, hey, look, we don't think ServiceNow is going back up and making new all-time highs. So at this important, hit this $800 level, and now looks set to open around 778 here on ServiceNow.
This is a contrarian call, and to your point, you don't typically see contrarian calls from analysts, so that's why it's a bold call. And I like contrarian calls. I like that somebody's got the guts to actually come out and make, that bold contrarian call here, and that's what we're seeing. Maybe they're looking at, this was a stock that really got beat up in May when we were all AI, and when they punished the cloud name, saying, well, maybe, there's this possibility that AI actually competes with the cloud. And that's where, you saw Salesforce and you saw Workday and you saw ServiceNow all really get punished. Those dips proved to be buying opportunities because Salesforce has come pretty much all the way back from its earnings dip. Workday has come up substantially here. And ServiceNow, to your point, has come back almost the entire thing, falling from the $800 area down to $650 and back to $800 fully round tripping. So they're saying take the money and run. You got your money back. You've been made whole. Take the money and run here. I won't argue with them. I think there's, I do think, I'm not chasing cloud names here at this time. I think there's better places to be, but it'll be interesting to see if they come in and buy the ServiceNow dip, because right now they've been hungry to buy any dips in tech.
Jay pointed out in the chat, as same analyst at Guggenheim that downgraded Tesla a few weeks ago. So could be maybe a buying opportunity here on the.
Really?
If the recent history is set to repeat itself. I haven't seen that, though, outside of just what Jay said in the chat. Other headlines we have. So I saw a headline this morning on CNBC talking about how travel in general is breaking records. Air travel demand is breaking records. Airline profits are not. So, and we also have a headline in Boeing. But just talking about the overall airline space right now, we can pull up the Jets ETF if we want to. But you have record travel numbers. You can see it. It's all public information with the TSA numbers. but the stocks themselves aren't doing that well. And we've talked about it on this show before a lot, that the airlines are just not that profitable. And that's why you see these airlines struggle even when you have a lot of people flying. So if you're looking at a Delta Airlines or a Southwest, I mean, a lot of these stocks still haven't even came close to their pre-COVID levels. So I don't really know. I mean, Dennis, maybe for like a trade or something, you want to buy the dip on Delta and get in and out of it. But I don't know why you would buy and hold these stocks when you just have so many other better opportunities.
No, they've been terrible. I have a little bit of American Airlines in the long-term portfolio. I sold half the position when it started breaking down. I was like, well, I'll hold on to half. You know, what damage can it do with smaller size position? Like, it does a lot of damage. You're just wasting your time and wasting your money there. And to your point, AB, I'll actually go against your point. They are actually very profitable. The airlines have been profitable, but you know what? The market doesn't give a crap. There's no AI story here, and they think the businesses are cyclical, which they absolutely are, and they're not sustainably profitable is maybe what the word you're looking for there, because, you know, they're profitable at this time, but when the cycle turns, you know, when the, you know, you turn into a lower cycle, then, you know, these companies actually go to where they're burning cash. So it hasn't been a great time to be an airlines investor, despite an excellent time for the company's fundamentals. I mean, Delta and UAL were killing it. They were breaking out. Now they've rolled over too. LUV has been an epic disaster. We've got Elliott in there, and they're probably regretting it here now because the stock is breaking down substantially, actually, from even where Elliott was buying it here. So I just think, to your point, better places for your money. The airlines should have been doing pretty good with these record numbers. Like, the stock prices themselves should have been doing really good. What happens if we actually do get a downturn? I mean, that's the problem here. And the airlines have just been a terrible place to park your dollars.
Yeah, and as I mentioned, we did have some news on Boeing this morning. The company officially set to plead guilty to some charges related to the Boeing crashes back in 2018 and 2019 that resulted in a few hundred deaths there. And so Boeing to plead guilty in 737 MAX fraud case. And the stock actually trading higher. I mean, we see this a lot with companies that, you know, the market starts to price in these lawsuits and stuff. And then when you get the news that, okay, they're actually resolving this lawsuit, you can see a little relief bounce. And you did have some analysts coming in last week and upgrading Boeing or saying there was upside. I forget where that was coming from. Let me find it in Benzinga Pro here real quick. I don't know if I'm going to, someone in the chat will be able to, oh, Boeing gets a hold from Wells Fargo. Maybe that's what I was. $186 a share price target. Oh, that's like where we're at right now. Either way, Boeing, I mean, still trading well off its highs. But potentially, I mean, maybe if you start to see some of the news start to reverse and you start actually getting some positive headlines on Boeing, that it could be a buying opportunity. I mean, it's still one of those, but it's still a duopoly. You really only have Boeing and Airbus. So there's still some value here, but again, when there's just so many better opportunities in the market and so many stocks that are getting love from investors and traders almost every single day, I don't know why you would diversify into something like Boeing or some of these airlines that have not.
Diversification is what has been holding my portfolio back, my long-term portfolio. My trading accounts are doing very well because it just goes wherever the money is. But I've got this diversified long-term account, and it's been not the play. I do think Boeing has priced in a lot of bad news. I do think if you got a 5-year time horizon, you'd be happy that you bought Boeing here, but I don't know when the story turns around. It feels like Alibaba to me. I think Baba eventually in the long run is going to be higher just because there's just so much value there. I think there's value here in Boeing too, but again, as a trader, there just hasn't been the move. I do think if Boeing starts to get more productive and starts to go up like 190, 195, starts to think about getting over 200, that's maybe where you want to enter it for a trade. But we've just been chopping around here between 175 and 190 for a while here. Until it can get above 200, it's probably, you know, and again, two hats. The trading hat's probably staying away. The long-term investing hat says, if you want to take a shot here, I think you'll be happy 5 years from now. But I do think Boeing is priced in a lot of bad news, and I think the easy time for the shorts is past us here.
There we go. Well, it is 9 o'clock. We did miss a couple headlines real quick. Eli Lilly, first biotech deal of 2024, buys Morphic, ticker MORF, which is skyrocketing on the news. I mean, that's pretty standard, although it's 75%. So paying a decent premium here.
Yes, it is.
For this stock. I mean, the stock was a $22 stock, and they're buying it out at $57 a share. But the market is saying more likely than not, this thing goes through because the stock is trading pretty close to that takeover target at $57.
You rarely see in drug industry, you rarely see
Biotech,
antitrust.
yeah.
There's just so many companies, so it's
Yeah.
hard to. You rarely see that. What's the takeout price? 57, you said?
Yep, and we're at 50, call it 55.80 right now. It's only
Oh,
a
that's
buck.
where the takeout price is. I know where it's trading. What is the actual takeout price?
57.
57. So yeah,
And
you're
we're
buck 20. It's time value money. It's 100% time value money there.
Yep.
Sitting. So very little that they're giving to, potentially the deal not going through. XBI weekend trade works again. I still put it on every single weekend. It's like clockwork. Sometimes it works, sometimes it doesn't, but I think more often than not, it does work. It works here again, trading up 0.77% because MORF is actually part of the XBI. So we do see, the reason I do this trade is we see these deals typically get announced on Monday morning. So, you got, I don't know which company they're buying, but I get a shot at 120 companies every Friday that maybe one of those companies will get bought out and the XBI will get a lift. So, so I'm getting rewarded for that trade here this morning.
All right, before we wrap up, Dennis, just a quick preview for the rest of the week. Tomorrow we will, Joel will be back. We will have a T3 Tuesday. Always exciting to get a T3 Tuesday. Quiet first half of the week in terms of economic data and earnings, but then later in the week, of course, Thursday will be a big day where we get CPI data before the market. Friday we will get PPI data. So a lot of inflation numbers coming our way later in the week. And then I believe, I don't have the earnings in front of me, Dennis. I don't know if you do, but I believe we have Netflix coming in later this week. So maybe start to see at least some exciting earnings because we've been slow on that the past couple of weeks. Some banks potentially as well.
Banks are coming on Friday. We got Citigroup, JP Morgan, Wells Fargo, BK reporting Friday. Nothing really Tuesday, Wednesday. There's nothing of note here of major companies. Thursday is probably the first day where we're going to see Delta. So maybe get a pre-earnings run in Delta. I mean, expectations, aren't super high here. You could see a pre-earnings run there. We're going to get Pepsi on Thursday as well. Conagra is another one we're going to get Thursday, but nothing really that exciting until we get into the banks on Friday. And then we know in a couple of weeks we're in the mega cap tech, and that's when it really kicks off. To Spinner's point, Netflix next week.
There we go. Jay Rice, pointing out that Netflix is next week. So, all right, guys. Well, thanks for tuning in with us on Pre-Market Prep this morning. Happy Monday. Thanks to Anne-Marie Baiynd for joining us. Always great to catch up with her. Hope you guys have a good Monday. We will see you tomorrow morning.